This line used to be the reason I was telling every investor in Sydney and Melbourne to look at Adelaide. A flat, boring, undervalued market sitting on a structural bump of supply deficit, defense spending and interstate migration. That was 2023. This is now. The median is 750,000 and it's still moving. So the question I get asked every single week, have I missed it? Have I missed the Adelaide boat? And my answer might surprise you. I'm Roy and this is Roy Talks Property. Let me show you exactly what the data says about whether there are 90 days of opportunity left or whether you have genuinely missed the bus. To answer whether Adelaide's run is over, you need to understand what drove it in the first place. Engine number one, AUKUS capital. I have covered this in depth. The 368 billion AUKUS commitment put Adelaide on the global defense investment map. The Osborne Shipyard 30 billion submarine construction program is not a 3-year project. It's a 30-year project. Lot 14, the technology precinct in the CBD, is still growing. This engine is not switching off. Engine number two, interstate migration. Adelaide became the destination for Sydneysiders and Melburnians priced out of their own cities between 2021 and 2025. South Australia recorded net interstate migration gains for the first time in 2 decades. These buys came with equity from the eastern state properties and paid Adelaide prices that the locals considered stretched. The market readjusted fast to these purchasing powers. This engine is slowing as the price gap narrows, but it's not gone yet. And engine number three, supply deficit. Adelaide has one of the worst housing supply pipelines in any capital city relative to its population growth. The South Australia government housing targets are essentially they're underfunded. The problem is baked in. Builder insolvencies have hit harder in SA than almost anywhere else. New supply is not arriving in the volume that the market needs. So the question is, which of these three engines still has fuel? The 750,000 median headline is real, but like every median, it masks extraordinary variations, and that variation is where the opportunity lives. Let's look at the northern corridor, like Elizabeth Vale, Davern Park, Andrews Farm. These suburbs are still sitting at medians between 450,000 and 550,000. These suburbs are within 30 minutes of the Osborne Shipyard construction site. They have direct access to the Northern Connector Freeway, and there are an accommodation built for 10,000 workers being hired for construction of their submarine shipyard. This isn't a lifestyle investment. This is a pure cash flow play. Gross yields in Elizabeth Vale are sitting at 5 to 6% for investors who want yield security backed by a government-funded workforce. This corridor is offering remarkable value at a price point that any mortgage investor can service. On the other hand, we've got the inner south, Plympton, Edwardstown, Kurlalta Park, etc. The thesis there is different. These are inner ring suburbs, land-rich suburbs within 8 k's of the CBD that they haven't hit the same price acceleration as their northern equivalent. So a 3-bedroom house that's freestanding on 500 square meters might still be around 650 to 750 range. These prices will not last. These suburbs offer land content, proximity, school catchments, and so on. It's a great 10-year hold. But where's the 90-day window coming from and what's the playbook? Here's why the 90-day framing or window matters, because the next major AUKUS contract milestone is expected in late Q3 2026. Every major contract announcement in the AUKUS cycle has been followed by an immediate uptick in Northern Adelaide property inquiries. You want to own before the announcement, not after. Additionally, the negative gearing transitional window closes on June 30, 2027. If you settle or you purchase an investment property before that date, you lock in full tax deductions against your personal income for the duration of this window, meaning you're going to be able to get tax deductions for the next financial year. Don't forget to smash that subscribe button and I'll see you on the next one.